上爬。你相信你可以勇敢的往前冲吧，有想法就有办法，有办法就不用怕，我们一起到达是 number one， 强大的企业家，超越表现的力量，我们一起到达是 number one， 强大的企业家，超越表现的力量。我相信我可以，有目标就往上爬。你相信你可以，勇敢的往前冲吧，有想法就有办法，有办法就不用怕，我们一起到达是 number one， 强大的企业家，超越表现的力量，我们一起到达是 number one， 强大的企业家，超越表现的力量。我相信我可以，有目标就往上爬。你相信你可以，勇敢的往前冲吧，有想法就有办法，有办法就不用怕，我们一起到达是 number one， 强大的企业家，超越表现的力量，我们一起到达是 number one， 强大的企业家，超越表现。我相信我可以，有目标就往上 相信你可以勇敢的往前冲吧，有想法就有办法，有办法就不用怕，我们一起到达，是 No.1， 强大的企业家，超越表现的力量，我们一起到达，是 No.1， 强大的企业家，超越表现的力量。
Hi, good morning, everyone. Wow, you guys are so early. Very, very good morning to all of you. Now, I know you are here early. I know you are here waiting to learn my secrets. Yes, I am going to reveal my secrets today, and that is on techniques to solve tax audit and investigation issues. Yes, now we are going to start at 11. We are going to start at 11 o'clock sharp. Yeah. Now, since you're so early, can you just help me do one thing, one very simple thing? That is to share this Facebook Live out. You know why? Because this technique that I'm going to show you, that I'm going to share with you today, would really help you one day if you are being audited. If you are being audited by the Inland Revenue Board, you really would want to use this technique to solve your issue as well. So, since you're so early, help me to share this Facebook Live out by just clicking the share button. If you're viewing it from a phone, you will see it at the bottom of your screen, right? You see the share button, just click that share button. If you are seeing it from a computer, you will also be able to find your share button. Yeah, so please click the share button, share this out with your friends, your family, your business partner, business associates, yeah, whoever that you want them to also learn together with you. If you have got any names in your mind that you want them to come in right now to learn this together with you, tag their name into the comment box so that they can come in right now and listen this together with you, right? Because I am going to reveal my secret on tax audit solving techniques. Yeah, so I shall see you at 11 o'clock. At 11 o'clock sharp, we shall start today's session. All right, I'll see you at 11 o'clock. All right, see you later.
我相信我可以有目标就往上爬，你相信你可以勇敢的往前冲吧，有想法就有办法，有办法就不用怕，我们一起到达，是 No.1， 强大的企业家，超越表现的力量，我们一起到达，是 No.1， 强大的企业家，超越表现的力量。 信我可以，有目标就往上爬。你相信你可以，勇敢的往前冲吧。有想法就有办法，有办法就不用怕，我们一起到达，是 number one， 强大的企业家，超越表现的力量，我们一起到达。强大的企业家，超越表现的力量。我相信我可以，有目标就往上爬。你相信你可以，勇敢的。
Hi, good morning, everyone. Good morning, all to you. Wow, there are so many people right now viewing this Facebook Live, and I know all of you are eagerly waiting for me to reveal my secrets. Yes, I know you're eagerly waiting for me to reveal my secrets for today, and that is another technique to solve tax audit issue. Yes, you know what? We're going to start at 11 o'clock in just a few more minutes. We are going to start at 11 o'clock. But since you are early, since you joined in so early, you know what? Help me do one thing. Help me do one thing. It's not often that I will reveal my secret on techniques to solve tax audit issue. Yeah. So since you are here today, stay tuned. Don't go anywhere. But help me do one thing. That is to share this Facebook Live out. Do it by just clicking the share button. Now, if you're viewing it from your phone, you see at the bottom of your screen, you'll find that share button. Click that share button. If you're viewing it from a computer, you would also find the share button. Just click that share button so that everyone can learn this together with you. You don't just want to learn this alone, right? You want to benefit your friends, your family, your business partner, your business associates. I tell you what, they will thank you for this, because I am going to reveal to you another technique to solve tax audit issue. And today it's about compensation. It's about insurance compensation. Yes, it's something really interesting to talk about. So share this out with your friends, your family, your business partner, your business associates right now by just clicking the share button. Or if you have got any friends that you want them to come in right now, if you have this name in your mind, tag the name into the comment box so that they can come in right now and join you together with all of us here to learn this secret. Yeah. So in just a few minutes time, at 11 o'clock, I shall start my FB Live. Yeah. So I will see you at 11 o'clock. Don't go anywhere. Yeah, don't go anywhere. And I shall see you at 11 o'clock.
我相信我可以，有目标就往上爬。 相信你可以勇敢的往前冲吧，有想法就有办法，有办法就不用怕，我们一起到达是 No.1， 强大的企业家，超越表现的力量，我们一起到达是 No.1， 强大的企业家，超越表现的力量。
All right. Good morning to all of you. Wow, it's 11 o'clock in the morning already. And as promised, we shall start our Facebook Live on Secrets Revealed, Techniques to Solve Tax Audit Issue. Yes, as usual, every Friday, every week, I will be sharing some secret. Yes, I will be revealing some secret, and I will be sharing this technique to solve tax audit issues together with all of you. Wow, I see a lot of you have actually shared out this Facebook Live. Thank you so much. Thank you so much. Like I said, now if you have just joined us, like I said, it's not often that I will reveal my secrets, that I will be sharing my secrets with you all on technique to solve tax audit issues. And right now, today, it's already episode number 7. Yes, episode 7 already. Wow, thank you so much for all your support, for your ongoing support that, keep following this Facebook Live every week. Now, if you have just joined us, help me do one thing by clicking the share button. Yeah, this is the last chance for you to share this out with your friends because we are starting right now already. Yeah, share this out with your friends, your family, your business partner, business associates by just clicking the share button. Whether you're viewing it from your phone or from a computer, you will find the share button. Just click that because you want your friends to benefit from this as well. They will thank you for this, trust me. Or if you have any names in your mind, just tag their name in the comment box. Tag their name in the comment box so that they will come in right now and learn this together with you. They will definitely thank you for this because you will help them learn something, learn some secrets from me. All right. Now, I see a lot of people are actually responding to me. Wow. Thank you so much and very good morning. I see Angela was the first who actually tagged a friend, and then I have Katie. Hi, morning, Katie. Richard. Hi, Richard. Morning to you. Angela. Morning to you as well. Yu Siu Har, yes, thank you for sharing. Natalie, good morning. Jing Ying Chen, good morning. Hong Wei Ku, good morning as well. I have Cheryl Tang, Hon Ken, good morning to all of you. Happy Friday to you, Natalie. Yes, and Li Chai Yuan, good morning to you as well. Wow, so many people are joining us. Okay, now today we have more than 130 people. Wow, closing 150, closing 150 people. I think more people are coming in. Now, just like I always say, and whenever I do Facebook Live, I want it to be very interactive. I want it to be very interactive. I do not want to just speak alone in front of the computer, in front of this camera. It's going to be very boring. Trust me, it's going to be very boring. So I hope to have more interaction with you because you see the whole idea of this Secrets Revealed series is to help you understand more on the techniques to solve tax audit issue and to answer to your questions, right? So if you've got any questions at any time, feel free to just put in the comment box, and ask me because I will be answering to your questions, yeah? All right, so, wow, morning to Shereen, morning to TS Kun, morning to Jin An, VK Ko, Go I Kim, yeah? Wow, morning to all of you. Okay, now, we have close to 150 people already. Now, as usual, let me just ask a very simple question. Now, today, we are going to secrets, right? Secrets. And today is the 7th episode already. It's already episode 7. I know you say, hey, I missed the previous episodes. What can I do? Can I go back and view them? Yes, absolutely. Yes, you can always go back and view the previous episodes by going to my Facebook page. If you go to my Facebook page, that's Tax Guru Zen Chow. If you go to Tax Guru Zen Chow Facebook page, you will be able to find the previous episodes. They are all there, right? They are all there. Yeah, you can always go there and view the previous episodes. But I encourage you to view this live. Why? Because then only you can ask questions and I can answer to your questions, right? Regarding issues that we are going to discuss every week. Now, as usual, I would just want to know, more than 150 people viewing right now, how many of you here are first timer? How many of you are first timer? If you're first timer, can you just give me number 1? Give me number 1 in the comment box, right? Put 1 in the comment box to tell me you are joining for the very first time. I know some of you are long time followers, like I know Richard, right? You have been following me for very long. Like Cheryl, I know you have been joining me for very long, yeah? But I just want to see who are the first timers. If you're a first timer, can you just put number 1? Just put number 1 in the comment box. Let me know that you are the first timer. At least we know who are the new friends joining us today. Yeah. Okay, I have Angela. Angela, wow, you are the first timer and you helped me to share out. Thank you so much. Elsie Lim as well. Yvonne. I have Amy Yong. I have Susan Tay. Wow, so many people. Joanne Chin, Muhammad Fidaus, Honeycomb Sungai Wang. Okay, that's your name. I have Tai Chai Yun, Jen An, Cheryl Tang 7. Okay, I know you have joined me for many times. All right. Okay, I have Michelle Lim, Joey Chia, Kit Ong, Lin Leong, KT, Ng Ming Teck, Yu Siu Ha, third time. Wow. TS Kun is number 1 and won't be the last. Thank you so much. And yes, Richard, I know you have joined me for the most time, like just like Cheryl. Thank you so much. All right. Now, okay, I know there's a lot of first timers, right? Now, if you're joining us for the very first time, let me just briefly introduce myself, right? Maybe you do not know who I am. My name is Zen Chow, right? People call me the tax guru of YYC. Now, the fact is that I'm actually the tax director as well as the head of tax in YYC Group. Now, you probably ask me then, who is YYC over here? Now, let me just briefly tell you who YYC is. That's my firm, right? We were established since 1974, right? YYC is established since 1974. And our aim is to empower entrepreneurial success. Now, to do that, of course, we have a vision and mission. Our vision is we want to be the number one world-class accounting firm in Asia. Our mission is more important. Yeah? Our mission is we want to inspire everyone so that everyone can overcome their odds, unleash the potential, and most importantly, find fulfillment in life. Yeah, that's the most important thing. Yeah. Now, to do that, what can we do? Now, we need to do our brand promises. We uphold our 3 very important brand promises. Now, in YYC, our 3 brand promises here will be, first, to share our expertise. You see, why do we want to have today's Facebook Live session? Why do we want to share our secret? Who wants to reveal secret? You know, we reveal our secrets because we want to share our expertise to everyone out there. And we want to give the most proactive care to all our clients, because to our clients, we want them to have the most positive experience ever. So these are the 3 brand promises that we always uphold. Yeah. Now, you may think YYC is probably just a normal accounting firm out there. Yeah, which is not true. Why? Because a normal accounting firm would probably only offer you normal compliance service like audit, tax, and accounting services. But in YYC, we offer much more than that. We have our own advisory arm, and we have a huge range of advisory services like strategic planning, restructuring, valuation, even cloud and digital transformation. Yes, we help people do this as well. We also have our own business school. That means we hold a lot of seminars, workshops, from time to time. And we serve international firms as well, yeah, from our global business services like outsourced payroll, outsourced accounting, outsourced bookkeeping, etc. Yeah? Now, if you see any of these services that really interest you, feel free to drop us a message or PM us, drop us a message and inquire further. All right. Now, like I said, YYC was established since 1974, which means we're 46 years old this year. We're 46 years old, and we call ourselves an international firm. Yes, because we don't just have presence in Malaysia, we also have presence in Singapore. Yes, yeah, and we have more than 800 employees right now, more than 20,000 clients. We have trained more than 120,000 participants throughout all our workshops because we have done more than 5,000 workshops. Yeah, and these are all the awards given to YYC throughout these years. Okay. Okay. Now, YYC, like I said, is an international firm already. Therefore, we have presence in Singapore. But at the same time, we also have branches in Klang Valley, that is in Kuala Lumpur area, in Johor, and as well as in Penang. Yeah, so these are all our branches. Okay. Now, okay, I know you're eagerly waiting for me to reveal my secret, right? I know, all right? But I always want to ask one very simple question before I get into my secret. Why? Yeah, what question is that? I need to ask you one simple question and I want you to answer. I have more than 170 people right now. I really want to get response from all of you so that it's interactive. Yeah. The question is very simple. Do you want to learn my secret? Do you want to learn my secret? If you want, please put I want. Put I want into your comment box. Put I want into your comment box to show me that you really want to learn my secret. Okay, I see Jing Ying is the first to say I want to learn, right? You are really quick. You're really quick. But who else want to learn? Now, if you really want to learn, if you're eager to learn my secret, put I want into the comment box so that I know you really want to learn my secret. I want to see how many of you, there are more than 170 people right now viewing. I want to see how many of you really want to learn. All right, if you want to learn, put in I want into the comment box and let me see how many of you really want to learn. Okay, I see all the messages are coming in already. All the messages are coming in. Thank you so much. Thank you so much. And yes, today I am going to share with you another tax audit and investigation issue. And like I said, today is episode 7, right? It's episode 7, yeah? If you missed the previous episodes, don't worry. Like I mentioned, just go to my Facebook page. That is Tax Guru Zen Chow, Tax Guru Zen Chow Facebook page. You will be able to find all the previous 6 episodes, yeah? So today is the 7th episode. And today it's very interesting because we're going to talk about compensation. Yes, we're going to talk about an income and a compensation. Now, I believe a lot of you would purchase insurance, right? A lot of you would purchase insurance, and some of you, now I would say touch wood, if bad thing happens to you, you will claim insurance, right? You will claim insurance, right? Whether it's accident or injury, right? You will claim some insurance compensation. So the question here is, a lot of people ask me, when I receive insurance compensation, is this taxable? Do I have to pay tax for my insurance compensation that I receive? That is always the question asked, yeah? So today, let's first look at what's the general principles of taxability. Now, Section 3 of the Income Tax Act, Section 3 of the Income Tax Act says very clearly that income shall be charged to tax, for each year of assessment upon the income from any person accruing in or derived from Malaysia, or even sometimes received in Malaysia from outside Malaysia, right? That means if you earn any income that's accruing or derived from Malaysia, and some of the income that is received in Malaysia but received outside Malaysia, from outside Malaysia, it's taxable. It's taxable. Now, that's the general principle under Section 3, okay? But of course, some people will say, hey, if I receive money from overseas, is that also taxable? Now, that's why under Schedule 6, paragraph 28, right? Schedule 6, paragraph 28 of the Income Tax Act then says, if you receive money in Malaysia from outside Malaysia, there will be exemption. It will be exempted from tax, There's an exemption from tax is provided on this foreign source income. That means if you can prove that this income is received in Malaysia, but the source of income is outside Malaysia, even if you receive it in Malaysia, it's not taxable, right? It's not taxable, So that's the general principles of taxability. But if we go further into insurance, let's be more specific about insurance. Now, under the taxability of income, we say, hey, if this income is derived during a year of assessment, right, it is from a source within Malaysia, right, with a source within Malaysia, and by any person, anyone, as long as it is not capital in nature. Now, this is the important point. Yeah, as long as your income is not capital in nature, then it will be taxable. That means, yeah, if it is capital in nature, it may not be taxable already. Now, it says if it's derived in a year of assessment from Malaysia, right, by anyone, if it is not capital in nature, it will be taxable. But once it's capital, it's not taxable. So if we go down into our insurance, yeah, then let's look at the issue. Because I said insurance compensation, it can be capital in nature, it can be revenue in nature. Now, if it's revenue in nature, it's taxable. But if it's capital in nature, it's not taxable. So how do I say whether it's taxable or not taxable, whether it's capital or not capital, right? So this is the case that I want to share with you today. Now, I have got a client, right? We have got a client who has been audited as usual, right? Every week I'll be sharing a case with you all right? And this is case number 7 already. Yeah? We have got this client who are being audited by the Inland Revenue Board. Now, what's the background of the issue? This client of ours, right, owned a factory building, right? And this factory is being let out, right? It's being let out to generate rental income, okay? So you have a building, you rent out, you earn rental income, right? But in 2017, in the year 2017, something bad happened to the factory. Factory was destroyed by fire, right? Which is bad, yeah, bad luck, yeah. But this client purchased insurance. As usual, we will buy fire insurance for our business premises, right? We will buy fire insurance, and this client also bought fire insurance for his factory. So even though the factory was destroyed by fire, there is insurance compensation received. So the client then received an insurance compensation in year 2017 as well as in year of assessment 2018, right? So this compensation is split in 2 portions. First portion was paid in year of assessment 2017. Second portion is paid in year of assessment 2018. All right. Of course, this compensation received by our client was then used to rebuild the factory. So the factory was then rebuilt and everything is completed in year of assessment 2018. All right. So now these are the breakdowns, and this is the breakdown of the insurance compensation. 200 over 1,000 received in 2017, 40 over 1,000 received in 2018. Yeah. Now, this compensation received, yeah, was then brought to tax in YA 2017 and 2018 by the Inland Revenue Board, which means when this client received compensation, right, he thinks, hey, this insurance compensation should not be taxed, because he claimed that this is capital in nature, shouldn't be taxed. But when the Inland Revenue Board came in and audited our client's account, the IRB, the Inland Revenue Board, says your compensation received for the factory should be taxed. They bring it to tax in 2017 and 18, tax them. So what happened is IRB says what? Now this is the issue raised by the IRB. Inland 22 sub 2. Based on subsection 22 sub 2 of the Income Tax Act, you have to pay income tax, right? You have to pay income tax, and this is what the Inland Revenue Board says, yeah, right? Those who can understand Malay, this is what he says. He say, oh, pendapatan ini sepatutnya dilaporkan sebagai pendapatan kasar mengikut Subperenggan 22/2, okay? Di mana pendapatan kasar daripada suatu tempoh asas, okay, termasuk jumlah yang boleh diterima melalui insurance. You see, it says, according to section 22 sub 2, melalui insurance ganti rugi pulihan pembayaran ganti, okay, kerana kehilangan pendapatan daripada punca itu. Hey, the Inland Revenue Board says you have to be taxed. You have to be taxed for insurance compensation if it is due to loss of income from the source. And then Inland Revenue Board says all this compensation which you have received, which you have not declared as taxable income, I need to tax you back. I need to tax you this one, and the client has to pay more tax and penalty as well, because the client say this is not taxable, this is capital, right? And therefore, no, the Inland Revenue Board come in. So what is this issue all about? Now, the issue lingers around section 22. Section 22 sub 2 of the Income Tax Act. Now, if we look at the whole thing, again, yeah, Income Tax Act section 22 sub 2 says, subject to this act, if you receive a gross income, right, including on any sums receivable or deemed to have been received for that business period, right, if it is by way of insurance, indemnity, recoupment, recovery, or reimbursement, yeah, this has to be taxed. Yeah, this has to be taxed, where such sums are in respect of the kinds of outgoing and expenses deductible. That means, he says, if you have claimed deduction earlier on your insurance expense, if when you buy insurance, when you pay your insurance premium, if you have already claimed deduction, yeah, now when you receive it as compensation, indemnity, right, or recoupment or recovery, this has to be tax ready because it was actually deductible earlier when you pay for your insurance premium, right? So it says this has to be deductible, or if it's compensation for loss of income from that source, it has to be deductible. It has to be taxable. It has to be taxable. So of course, our client says, hey, you know, this is something not right. And you know what? We went in, we helped the client. Yes, we helped the client. We look into the case, we analyze this insurance compensation. We analyze the insurance compensation, and what do? First, we find out, hey, is this capital or revenue? You see, the most important thing here is when you receive a compensation, an insurance compensation, we need to find out whether it's capital or revenue receipt, because this determines whether it's taxable or not. Because when you receive an insurance compensation, when you have an insurance compensation, it can go either way. It can go either to capital receipt, which I say it will not be taxable, or it will go to revenue receipt, which it will be taxable, or it can be both, Yeah. So we look into this case. We analyze, yeah. So we look at the whole thing, yeah, and we try to find out. Now, remember one thing. In Malaysia, there is no capital gains tax. Except for real property gains tax. That means if you dispose of real properties or shares in a real property company, that yes, you may be taxed. Yeah, that you may be taxed because that's real property gains tax. But if it's not a real property or shares in real property company, there is no capital gain tax in Malaysia. And therefore, if we can prove that this is capital in nature, this is not going to be taxable. That means if a receipt is a capital receipt, it should not be taxed. So what do we analyze further? We analyze the insurance policy. We pick up the insurance policy. We look at the insurance policy. What is really being covered by this fire insurance? What is really being covered? We also look into the insurance report. Yeah, there will be an insurance report coming up from the insurance company to say that, you know, what kind of damage and what are they compensating. And you know what? We notice from the summary of this report, majority of the compensation is for compensation of the building, and only a small portion is compensation of rental income. Now, if you can look at this, I know it's probably a little bit small, right? This major portion over here, it's on the building. Including the foundation and drains, yeah. And the rest are like on the surveyor fees, you know, consultants fees, you know, removal of debris. And only this small portion is on rental. Yeah, because you see, when you purchase an insurance for the factory, yeah, the factory is used to let out. Like our client, they let out the factory. So when they buy insurance, clearly that my insurance is to cover, of course, fire incidents, but the premium is calculated in such a way that, you know, the sum insured for the building is this much, but the sum insured for my rental, because if there's anything happened to my building, if my building got caught by fire, right, I cannot rent out. When I cannot rent out, I lose out on my rental income. So this insurance also covers the rental income portion. So this insurance covers both things here, on the building as well as on the losing of rental income, because when it's caught fire, you can't rent out, right, for a certain period. So that is what the insurance is covering. So we analyze this and we tell the Inland Revenue Board, and we say that this insurance doesn't just cover the loss of income, it also covers the building itself. It also covers the building itself. And in addition, this compensation receiver is wholly used for the construction of building. Yeah, this insurance receipt is used for the construction of building, and all these costs here is not even entitled for deduction, because when you receive compensation, you use it to rebuild your factory. This rebuilding of factory, you don't get any deduction under Section 33, right? Those who have been following me, you know the general principle is Section 33 is the one that says whether you can deduct tax or not, yeah, with the expenses incurred. But this is capital expenditure. When you build a factory, it's capital expenditure. You don't get any deduction under Section 33. So we then tell the Inland Revenue Board, we say, look, this insurance compensation is not entirely on compensation of rental income. Only the portion that is for the compensation of rental income should be taxable. Only that should be taxable. Why? Because only that portion is called a revenue receipt. Only that portion is called a revenue receipt. The balance, right, the majority of the compensation is for the building, and it's used to rebuild the building. There is no deduction taken. There is no deduction taken from the money, right, that I received, and there is no this compensation is purely for my capital expenditure. So it's capital in nature. It is to compensate my capital asset. It is not to compensate my loss of income, because according to Section 22 just now, it says only compensation for the loss of income is taxable because that's revenue. But if it's not for the loss of income, it is for the building, it's for the capital asset, it is capital receipt. So we tell the Inland Revenue Board, look, I have analyzed this, I have looked into the report, I've looked into the policy, and only the portion for the compensation of rental income should be taxable, not the entire amount. And you know what we do after that? We give all the policy, the insurance policy, the insurance report, the letter of award for rebuilding, because they have to prove that, this compensation received is then used to rebuild the building, and also the photo of the building damage, police and fire report as well. We submitted all this, we do an analysis, and we tell the Inland Revenue Board, you should not tax our client the entire amount. Only the portion for compensation for rental should be taxed. And yes, we successfully help our client. We successfully help our client to drop not to drop the entire issue, right? But reduce the amount substantially, right? Instead of the whole amount of this, I'll show you again. Instead of this whole 292,000 amount, right? We then tell the Inland Revenue Board only the small amount, right? Only the small amount over here, 36,000 over here, should be taxed. The rest, right? The rest, which is used for capital in nature, should not be taxed. Yeah, only the small amount over here for the rental income should be taxed, and not the entire 292,000. Yeah. So we show this to the Inland Revenue Board, and we convince them, and we tell them, if a receipt is a capital receipt, it should not be taxed. And this is not relating to disposal of real properties or shares in a real property company. So there is no capital gains tax for this. Yeah. And furthermore, the compensation is used for the construction of factory, right? It is not deducted as expense at all. So there is no deduction taken from this compensation. It's used wholly to rebuild the factory, And because of that, we managed to convince the Inland Revenue Board and only tax the rental compensation portion, and not the entire amount. And because of that, we managed to save a lot of tax for our client. Of course, we save a lot of penalty for the client as well. Yeah. So this is what it is about insurance compensation. So you gotta take note. Yeah. Our advice here is, make sure you have all your documentations kept properly. These documentations would be your evidence to show whether your compensation received is relating to capital in nature, or is it relating to revenue in nature. That's why always keep your documents, things like your police report, your fire report, photo of the damaged building, yeah, and most importantly is your insurance policy and report, because your insurance policy will tell you very well, what kind of insurance is this, what kind of things is this insurance covering. And the report, when they pay you, they will state clearly the compensation that you receive, what is it for? Is it for the capital asset, or is it for the loss of income? It will be stated clearly in the compensation report. Have all these kept properly, because if you don't have this, how do you argue? How do you argue with the Inland Revenue Board when they tell you, oh, everything has to be taxed? Yeah, you got to have this. and make sure you properly review your insurance policy to cover the coverage of insurance, right? Whether it is loss to the damage of the property or is it loss to income. Yeah, so remember, if it's loss to income, it will be taxable, but if it's loss to property, damage of property, it can be considered as capital in nature. All right. Now, once again, I've taught you the technique on how to solve this issue, right? But of course, if in the event, in case you receive any letter, if you receive any Inland Revenue Board letter on tax audit, which we know Inland Revenue Board is pretty active right now, going out to look for, cases and audit you. If you receive any tax audit letter, don't be afraid. Like I always say, don't be afraid. Everything is solvable, right? We can help you. We can always help you. If you receive any tax audit letter that tells you, oh, you have done this wrongly, you have done that wrongly, you got to pay more tax, you got to pay more penalty, don't be afraid. Don't be afraid. Don't be panicked. Yeah, because a lot of people will say, oh no, I have to pay so much tax right now. I have to pay so much penalty right now. Now, you may not have to pay them. You may not have to pay them if we can argue out this case. Yeah, that's why we need to negotiate. We need to argue out by showing proof, by analyzing it. So if you receive any tax audit letter, like I said, don't be afraid. Come to us. We can do a complimentary online consultation session for you. We can do a complimentary online consultation and see if we can help you to solve this matter, because our aim is to help you solve tax audit issue. Just drop us a message. If you got a letter, if you got the tax audit letter, drop us a message. Go to our Facebook page, yeah, whether it's YYC Advisors or my own Facebook page, that's Tax Guru Zen Chow Facebook page, and drop us a message, send us a message, yeah, so that we can look into your case and give you a consultation for free, complimentary, yeah. Of course, if we think we can help you, we can help you further, and we'll see how we can pick up the case, yeah. But if you send us a letter, we can do an analysis for you. It will be complimentary consultation, yeah. So remember, go to our Facebook page, like, share, and follow. Like, share, and follow our Facebook page, because this is already 7 episodes. I know a lot of you say, I missed the previous 6 episodes. Oh my God, how I didn't know about every week there is this sharing session. Follow our Facebook page, especially Tax Guru Zen Chow, my own Facebook page. Follow my Facebook page so that every time when we have live session, you will be the first one to know. You will be the first one to know that we are doing live, and you will learn from us. You will learn from us, and you will learn more secrets that is being revealed by me. Okay? All right. So now let's go into my Q&A session. I have seen a lot of questions coming in already. As usual, I'll be here to answer to your questions if you've got any questions to ask. Okay? All right. Let me just put it in the slide and let me just drink some water. Yeah. Okay. All right, let me just go to the first question over here. Let's see. Okay, I've got one long question. I'll just bring this up. Okay, the question says this. It says from VK Co. VK Co says, we had bought the car insurance for company car, all right? The car, I think the car had an accident, right? Then claim from third party, right? Other party. Due to other party fault, the company car is sent for repair, all right? Then the employee borrow car from friend to work. Okay, then you say, our company had claimed the other party for loss of use of car for a few days. The claim amount insurance compensation was then paid directly to our bank. How is it treated in accounting? Okay, so VK Co. So you are asking on accounting treatment, is it? You're asking on accounting treatment? Now, I would say if it's on accounting treatment, of course, I'm probably not in the best position to tell you, because we are not really doing accounting. Well, okay, but if I can just tell you based on what I know, if you receive compensation from someone, right, then you probably have to credit it as other income. You have to credit it as other income, and then you have to debit it into your, your cash or your bank lah, whether you receive it and put it in the bank or in cash. Yeah? So that's how you do it lah, from accounting point of view lah. All right. Then you say, okay, I know it's too long, but I'm reading it from the other side. Then you'll say your company wants to pay the same amount which insurance compensation claim for employee to borrow from friend. How's it? Oh, again, how is it treating accounting? Okay, VK, you know what? Right? If it's really on accounting issues, I think I'm probably not in the best position to answer because I do not want to answer on the accounting part, all right? Because we want to talk about tax issues. But you know what? If you really say, okay, I think I would really need you all to help us, right? Because you see, we provide accounting service. We need you all to help us. We probably want to let you do your our accounting as well. You know what you can do? Drop us a message, VK Code. Drop us a message so that we can see how we can help you out on your accounting. Maybe you can just let us handle your accounts. Then we'll be able to help you a lot. Yeah, BK. So our advice, you could probably send us a private message, then we can get in touch with you on this. Yeah, BK, because your question is pretty long and it's regarding accounting. Okay, now next question is from Lam Tak Singh. Lam Tak Singh is asking, what if no building being reconstructed? Very good question. Now, I know this question will be coming up. Some people may say, hey, we are proving that this compensation receiver is to rebuild the building, What if there is no building being reconstructed? Then how? Now, let me tell you, the concept here is like this. If you receive a compensation, and if the compensation is for loss of income, if it's for revenue in nature, then it's taxable. But if it's for capital in nature, if it's to compensate the loss of the building, even if you say you don't reconstruct, right? It is still capital in nature. Okay, reconstructing is a plus point. It's a plus point for us to say, hey, look, this amount that you receive, it's not even used for any other purpose. It's used directly to compensate the building. That means this compensation is a building compensation. But if you say you decide not to rebuild already, then what will happen is it will be deemed as you are disposing of your factory, right? And you receive this compensation. That means you are deeming it as you are selling off a property and you receive compensation. But this will then trigger real property gains tax. It may trigger real property gains tax because you are selling off a property. You deem as selling a property and you will receive compensation. But right, it will not trigger the real property gains tax directly. It will not trigger it directly because compensation receiver under real property gains tax is actually an amount that will reduce your selling price in future. This compensation reduce your buying price in future. So when you receive compensation and you decide not to rebuild, for RPGT purpose in future, if you were to sell off this land or the building later, that will reduce your buying price and you will see yourself paying more RPGT. But from income tax point of view, it is still capital in nature. It is still not brought to tax. It will still not brought to tax. Yeah. So that is how it works. Yeah. Lam Tak Singh. Okay. All right, I have another question here, and that is from Jason Tan. Okay, Jason Tan is asking, compensation from fire consequential loss subject to tax? Now, Jason, can I just get more understanding from you? Like, what do you mean by compensation from fire consequential loss? Now, I don't really get like what does it mean by fire consequential loss, but again, let me just repeat. If you say you receive compensation because you actually lose some income, you lose the income stream, therefore the compensation is to compensate your income stream, that is taxable. But if the compensation is to replace your asset or is to compensate your asset, that is not taxable because that's capital in nature. Yeah. All right. Oh, I have Sonia says good advice. Thanks you. Oh, yeah, you're welcome, Sonia. Okay. And let me carry on with Jingying. Okay, Jingying has this question over here. Now it says, if company bought medical card to all directors and managers in 2018, one of the directors and manager, right, had a heart treatment. Oh, treatment of heart. Okay, insurance compensation will not be taxable, right? Since it is an add-back item. First of all, Jingying, why is it an add-back item? Because if a company buys medical insurance for the employees, for the directors and the managers, it should be deductible. It should be deductible already. You know, the insurance premium should be deductible. So I would say this insurance compensation will be taxable. Reason is because when you buy the medical insurance, it is a deductible expense. So now when you receive compensation, it is going to be a taxable amount. It's going to be taxable because the insurance premium that you have taken earlier is deductible already. Therefore, right now, when you receive compensation, it becomes taxable. Yeah, Jingying? All right. Okay, let me carry on. And oh, Sonia has this question. Let me just bring up Sonia's question. Okay, Sonia has got this question. Can you please elaborate on other types of insurance compensation too? Sonia, okay, when you gotta tell me like what do you want to know? Because when you ask me elaborate on all types of insurance like all risks, so like I said, the general rule is simple. The general rule is if you receive compensation for loss of income, that is taxable. If you receive compensation for your capital asset, that is not taxable. That's the general rule. So it applies to the same all other kinds of insurance as well. So you have to know what is this compensation for, yeah, to know the taxability. All right. Okay, next question here is from Natalie. Natalie Tiam. Natalie says the compensation must be paid to the company's name, it's taxable income. How about to director's name? it is regardless receipt from insurance company or from bank sectors, right? Now, Natalie, why would this compensation be paid to the director? Now, if it's paid to the director, does it mean that the insurance was actually originally purchased by the director? Now, remember this, yeah? If this insurance was originally purchased by the director, it would not be even deductible. Yeah, when you buy the insurance, it's not even deductible already, yeah, because the insurance is not even in the company's name, it's in director's name. It should not be deductible. Of course, if it's not deductible, right, because it's in director's name, now the compensation goes back to director, then of course it's not taxable for the company because this income is not even the company's income, it's the director's income already. Yeah, and if it was not deductible earlier, it is not taxable now also. Yeah, so this is how it works. Yeah, Natalie. All right. Next, look at the next case from Jingying as well. Jingying has this question saying that how about the compensation for burglary in office? Is it need to pay tax for compensation? This is also something that you need to look at, Jingying. Now, if it's a burglary, what is the compensation for? Now, put in this way, if you say, oh, I lost some computer, right? And the burglar came in, right? Lost some computer, and this compensation is to compensate my computer. This is capital in nature. It's not taxable, but it will be deemed as you have disposed of your computer because your computer is now gone and you receive a compensation. It will be treated as if you are selling off your computer and you get this compensation. Then we just have to look at the balancing charge, right? Yeah. But it's not taxable. This income is not directly taxable. We just have to use the formula, look at the balancing charge. Yeah. But you say, oh, the burglar came in and then it took some of my stock, my selling stock, my trading stock. Now they have to compensate me because I lost my trading stock. Hey, trading stock would become your sale in future, right? So now you are losing your sales. You're losing your sales because your trading stock is gone. So when they compensate you, it means you are compensating your future sales, right? You're compensating your future, so that will be taxable. So when it comes to burglary interest, you also have to analyze whether the compensation is going towards your capital asset or going to your trading stock. Yeah, Jingying? Okay, I hope I have answered to you. Next is Angela. Angela has the question over here. We bought PA insurance for our staff. If one of our staff passes away, right, and we claim within the company insurance, is it taxable? Now, very simple rule, yeah, Angela. If you say this PA insurance was deductible, which usually I would say it is, it was deductible because company bought for the staff, right? Now, when you receive compensation, it is taxable. It is taxable because whenever it was deductible earlier, right, and it is not capital in nature, yeah, you receive compensation, it is now taxable. But of course, you may say, hey, I also have to pay this to my staff. With this insurance, I have to pay this back to my staff, right? When you pay to your staff, that is deductible also. So you can set off each other. So in other words, if you say I receive the compensation, let's say you receive 100,000, you pay back the whole 100,000 to the staff family members, right? Because the staff passed away. You can actually set off each other. You receive compensation, which is taxable, but you pay off, which is also deductible. It sets off each other. Okay, get it, yeah, Angela? All right, but the concept is it is taxable. All right, I have Venice. Venice says, if the company gets an insurance compensation for the loss of money stolen by employees run away, shall the compensation be taxable? Yes. Loss of money is not a capital asset. A lot of people say money is asset, what? Right? Money is asset, what? Now, money is not a capital asset. Yeah. So if you lose money and you receive compensation, right? This compensation for the loss of money is still taxable. It's still taxable because money is not a capital asset. But then you say, huh? I lose money, people just pay me back. I have to pay additional tax. Not fair, what? Now, don't worry. The loss of money is deductible, provided you have all your report. Yeah, you have all your police report and everything, right? The loss of money will be deductible, but the compensation becomes taxable. So again, it knocks off each other, right? It knocks off each other. If you receive the compensation exactly the same amount to your money loss, then you don't see any extra tax being paid, right? Because it knocks off each other. Yeah, all right. All right, that's from Angela. And I have from Venice. Hey, oh, sorry. Let's look at Venice first. Yeah, sorry. Yeah, let's look at Venice. Okay, Venice says, hey, Venice is the one. Sorry. Venice is the one that asked about loss of money. Okay, let's look at Angela. Okay, Angela says, company use company car, right? And have an accident with third party. Okay, all right. And therefore paid the compensation to the third party for the repair cost. Is this tax deductible? Okay, now so you're talking about the deduction when you pay compensation to third party. Yeah. Now, this is very tricky. Yeah? This is going to be very tricky. Now, if you say you received compensation, right? If you receive compensation and you take this compensation and pay off the third party, then it just knocks off each other. It knocks off each other because the money that you receive is then used to pay off the compensation, right? Then you don't see any tax impact. But if you say you don't have any insurance or the insurance is not enough, they are not enough for you, right? To actually what you call it, pay off compensation, you have to pay extra compensation. So that means there will be extra expenses, right? The extra expenses is usually likely not to be deductible because you are actually not, yeah, you're now actually not paying something for you to incur to generate more income, right? This is a wrongdoing done by you, therefore you compensate someone. So it's a wrongdoing done by you. It's not in the production of gross income, so it's hard to say it is deductible. Yeah, but if you say you receive the same amount and you compensate, it just set off each other, it just knock off each other. Okay. All right, Jason has another question over here. Let me just go to Jason's company question. Jason says, company paid insurance for director, key man insurance, to cover company loss. Any compensation subject to tax? Now, Jason, very good question. A lot of people always ask about key man insurance, right? Now, key man insurance is, of course, a term used to buy insurance for, some key men, like directors, for example. So, key man insurance can be deductible, can be not deductible, and also, therefore, the compensation can be taxable, can be not taxable. So the rule is like this when it comes to keyman insurance. If the insurance premium for the keyman insurance was deductible, then when you receive insurance compensation, it will become taxable. If the keyman insurance earlier was not deductible, not tax deductible, when you receive compensation, it's not taxable. But what kind of insurance is deductible? What kind is not deductible? Now, general rules, but of course, I hope you can do more read up. Now, if you can just download the public ruling, there's a public ruling on keyman insurance, right? On this keyman insurance, right? You can download a public ruling issued by the Inland Revenue Board. You can just go to the Inland Revenue Board's website. There is a public ruling that talks about keyman insurance, right? So in the public ruling, it does say that if it is for, if you're buying insurance for the life, right? It's a life insurance, it's not deductible because it's of investment element, right? It's not revenue in nature. Therefore, when you receive compensation, it's not even taxable. But if you buy like medical insurance, personal accident insurance, these are not this is not capital in nature. This is revenue in nature. It will become deductible, and when you receive compensation, it is also taxable. All right, it's also taxable. Yeah. So do more read up, Jason, on this what you call it, keyman insurance. Or of course, if you say, hey, you want us to help you to plan, right? You want us to help you to see how we can plan the keyman insurance properly so that we get the maximum tax deduction or the maximum tax benefit, feel free to drop us a message. And then we can actually, see how we can help you, right, to do some planning for you, right? Jason, remember, you can always drop us a message and see if you need us to do some planning for you, yeah? All right, I have VK Code over here. VK Code asks, car compensation insurance received, is it taxable? So VK Code, it depends on whether this car compensation is for the repair of car or is it for the whole car, total loss. It is different. If you say you received compensation for the total loss of the whole car, it is not taxable from the income tax, but it is deemed as you have sold off your car. It's deemed as you have sold off your car. The compensation received will be used to calculate balancing charge. But if it's used to repair the car, then it's taxable because it is used for your repair cost, and your repair cost is actually deductible also. So you receive compensation that's taxable, but your repair cost is actually also deductible. All right, okay. All right, next I have Agnes. Company receive compensation from government for compulsory acquisition of company business location to cover the loss of income. Is this taxable? Again, Agnes, you mentioned is to cover loss of income. If you put in this way and you say it is to cover loss of income, I would say it's taxable because it's very clear already. Any insurance received, compensation received for the loss of income, that's taxable already. So unless you can prove that this insurance compensation received is not for the loss of income, it is for the building. It is for the building. Then it's different. And it will be a different story. So you have to see whether the compensation is for the real property or whether it is for the loss of income. But of course, if it's for the real property, it will be deemed as a sale of real property, right? And you will then have to declare the RPGT as well, right? The real property gains tax as well, yeah? All right, Natalie says yes, purchased by director. Yeah, that's what I say. Natalie, if it is purchased by director, it could be viewed as director personal expenses. Yeah. All right. Let me look at some questions from the other side. Okay, I have a question here from Lee Ping Chan. Lee Ping Chan is asking, is the insurance fund we receive upon maturity taxable? Now, Ping Chan, if this fund, when you say you receive insurance fund upon maturity, it's always investment, right? These are called investment insurance or endowment. Yeah. So when it is investment kind of insurance, it is not deductible at first place anyway. When you receive back all your fund upon maturity, it's also not taxable, right? Because it's an investment, it's a capital gain. It's a capital gain, Ping Chan. Jessie Choi is also asking, I received the GKP Grant Khas Prihatin, received by LHDN 3000. Need to declare and submit Form B next year. Now, Jessie, if you receive Grant Khas Prihatin, it's not taxable, right? I know this is not really relating to insurance compensation. Someone asked me about the GKP. Okay, it's not insurance at all, but since you asked, Jessie Choi, right? GKP Grant Khas Prihatin is not taxable because it's a grant. Because it's a grant given by the government, it's not taxable. So you don't have to declare, yeah? You don't have to declare. All right. Okay, let me continue. Let me carry on and look at Jenny. I have one question here from Jenny. Jenny says, can I know medical insurance buy for the company director? Medical insurance for the director or staff, is it need to declare under EA or BIK? Now, Jenny, if you say medical insurance, you have to look at who is the beneficiary, who is the policy owner. This is very important. If the policy owner is the company, you don't actually have to put it under BIK because a company buys medical insurance for the staff or the director, and the policy owner, the beneficiary, is the company. This is not benefit given to the staff because when you receive compensation, the compensation is paid to the company. The company is the one that receives compensation, so there's no benefit to the staff, right? Only if you say, I buy medical insurance for my staff, for my director, and it's in the name of my director and staff, they are the policy owner, they are the beneficiary, then only it becomes a perquisite. It becomes a perquisite, or we usually call benefit that you have to put into the EA form. So it depends on who is the policy owner over here, Jenny. All right, next I have Lily. Lily Tang is asking, fire insurance includes stock, building, and machine, how to split to revenue and capital. Now, Lily, this is why I say the report is very important, right? When you receive compensation, of course, when you first buy, for your stock building machine, right, you don't really split it. I know you don't really split it, yeah, and you will just claim deduction. But when it comes to compensation, the compensation report becomes very important. And this is exactly what happened to our client. When we receive the report, we have to analyze the report to see whether the compensation is relating to your capital or is relating to your revenue. Yeah, and that is how you look at whether it's capital or revenue in nature. Yeah. All right. Next is Doris. Doris is asking, personal insurance compensation need to declare. Well, Doris, if it's your own personal insurance, which you have not even claimed any deduction previously, right? When you receive compensation, of course, you don't have to declare, right? You don't have to, because it's not even an expense deductible under Section 33 earlier, right? You don't even charge it out as your business expense. Okay. Next, I have Yen Ling. Yen Ling says, I claim on inventory on fire or burglary. Now, if it is, I told you, if you buy insurance on inventory, stock in trade, when they pay you compensation because of fire or burglary, it is to compensate your future sales, right? It is because you lost your stock, you can't sell in future. It is to compensate your future sales. If it's to compensate your future sales, of course, it is taxable. Yeah, Yen Ling. All right. Now, I have another long question here from Carmen. Wow, this is a long one. Okay. Carmen says, group hospitalization insurance was bought for directors and the premium was added back. And this is claimed that the benefits of directors who are the major shareholders. Okay, why should it be added back? Now, if it's group hospitalization, let me tell you, Carmen, if it's group hospitalization, it should be allowable. Only if you say it's specifically for the director, then it may be added back if the director is also a major shareholder. But if it's a group hospitalization, right, for everyone, that means directors together with all the staff, it should be deductible. Yeah, but anyway, let me just see. When insurance compensation for directors' medical claim and bank into bank's account, should it be taxable since this insurance expense was added back earlier? Now, that's why, Carmen, this is what I want to tell you. It should be allowable, right? If it is something that is allowable earlier, then when you receive compensation, will be taxable. But of course, unless you say this insurance, this medical insurance, this hospitalization insurance was specifically for the director only, and then the director is also a major shareholder, which is controlling the company, of which it was not deductible earlier, then when you receive compensation, it becomes not taxable, right? It becomes not taxable because you had not claimed any deduction. You had not claimed any deduction from this expense earlier, right? When you pay the insurance. So you look carefully whether it was really deductible or not deductible. Now, of course, Carmen, this is what I will probably give you some more advice. If you think, hey, I want to do this better, I want to plan this better, I want to see what kind of deduction is there for me, I want to really maximize my tax savings, feel free to drop us a message. We can look into this case for you, right, if you want to. And of course, if you think, hey, if you can really help me, then I probably want to appoint you to become a tax agent. Feel free to do that. Yeah, we're more than happy, all right? And yes, right, we will be more than happy to help you on that. Yeah, Carmen? All right. Next, let me see. Okay, who else? I have Agnes. Okay, Agnes. Wait. Look, that's okay. This one first. Lynn Lim. Okay. Lin Lim says, a company loan to staff, and at the end, the staff resign, unable to repay the loan. Okay, can company claim tax deduction on the so-called bad debt? Lynn, this is not really regarding today's topic. Today is about insurance compensation, when you talk about bad debts. Now, let me tell you, Lynn, answer is no, you cannot. Because loan to staff is not a trade debt. It's not a trade debt. It's a non-trade debt. Now, if your staff cannot repay, right, you have to write it off as bad debt. This is not tax deductible. All right. So I know, even though this is not related to insurance compensation, but since you asked, never mind, I'll just answer to you. Okay, Lynn, if you want to understand further about this, there is also a public ruling about bad debt written off, right? There is a public ruling issued by the Indian Revenue Board about written off. Of course, if you think you want us to help you to plan something to see how we can assist further, drop us a message, PM us, help you better, right? Okay, Agnes has got this question. Is the compensation tax on receipt or receivable basis? It's on receivable basis. Yeah, it's on receivable basis. Yeah, that means once it is firm that you will receive that insurance compensation, it is taxable already, right? It is taxable already. It is actually stated in our in the Act also. Let me just show you. It is stated in the Act, right, under Section 22, right? I just quickly go back to this to show you. See this, right? When Section 22 says includes sums receivable or deemed to have been received, right? So it is receivable. Once it is receivable, all right, then it is taxable already. It doesn't really have to be received, right? It doesn't have to be received. That means it's not really paid, right? Even if it's accrued, it is also taxable already. Yeah. All right. Let's carry on. I have here from Ng Ming Teck. I have a question here from Ng Ming Teck. Let me go to where was it? Sorry. Okay, Ng Ming Teck has got this question. We received PSI from SOCSO for not reduce the salary. The amount received from SOCSO, is it taxable? Ng Ming Teck, what is PSI? I'm trying to figure out what is PSI. What does it mean? Maybe Ng Ming Teck, you can just put in the full term of what is PSI. You say you receive PSI for not reduce the salary. Because you don't reduce salary, therefore you receive something called PSI. You gotta tell me what is that first. You gotta tell me what is that, yeah. Then only I can to explain further. But anyway, this is not insurance compensation. Again, this is not insurance compensation. You know what? When I do this, right? I do this. Drop us a message, send us a private message, yeah, with full details. What is PSI, yeah, and why do you receive the PSI? Send us the full detail private message, right? Then we will see how we can help you further. Well, we can see how we can help you further. I think that would be better. Yeah. All right. Okay. Send us a private message. Ming Teck. Okay, then I have here one more question from Jingying as well. Jingying again. Jingying says, if company had added back the director insurance, yeah, how about the insurance compensation received? Is it still taxable? Now, Jingying, if you said you have done wrongly, that means the director insurance is supposed to be deductible, but you go and add back yourself, then it will still be taxable one, it will still be taxable one, because it doesn't mean you can't claim deduction. You can claim deduction one, it's just that you don't want to claim deduction because you have done wrongly. Now when you receive compensation, it will be taxable. You see, only expenses that is not deductible, really not deductible one, and now you get compensation, is not taxable. But if you had actually claimed deduction but you didn't do it rightly, and now you receive compensation, is still taxable. That's why I say, Jingying, if you think you need us to help you, right, to help you to do that, to plan something, you can actually come back to us. Send us a message, drop us a private message. We can see how we can help you, yeah? All right, Honeycomb is saying, what do you mean PSU? I do not know, Honeycomb, right? Never mind, I'll just get Mingtek to send me a private message. Yeah, send us a private message so that we can see how we can help you down that. All right. Okay, well, it seems like I've answered all questions, and as usual, our 1 hour is almost up. It's almost 12 o'clock already. Yes, we have got another great 1 hour, another fruitful 1 hour of Facebook live session, of which we have discussed our secret, our technique again to solve tax audit issue, and I've answered to so many of your questions. Thank you so much again for all your time, all the 1 hour they have spent with me. You know what? This is the 7th episode. Of course, next week we'll continue doing our 8th episode, another issue, another secret that we are going to reveal to you. All right. So remember to stay tuned. Don't go anywhere. Remember to stay tuned and follow us. Just follow our page. Follow my Tax Guru Zen Chow page, and you will be the first to know whether there will be any live session or not. Okay. So today, I think it's all up to now, all right? 1 hour is gone, all right? And last thing, remember, if you receive any tax audit letter, anything that in the Indian Revenue says, oh, you got to pay more tax, more penalty, don't be afraid at all. Don't be afraid at all. Just drop us a message, and we can help you to solve this issue, right? We do our best to help you to solve the issue, because in YYC, what we want to do is help you to solve your tax audit issue, right? That is what we want to do for you, all right? So till then, thank you so much again, all right, for joining us. And I hope you have a great weekend ahead. It's Friday already. It's Friday. Hope you have a good Friday and a good weekend ahead. And I shall see you again next time, right? And thank you so much. Remember, follow our page, like, share as well. Okay? I'll see you again next time. Bye-bye. Hope to see you again. Bye-bye.
我相信我可以，有目标就往上爬。你相信你可以，勇敢的往前冲吧。有想法就有办法，有办法就不用怕，我们一起到达。